Well there everyone, today's video we're going to take a look at Angela Rayner's tax situation regarding SDLT, everything that's been in the press recently leading to her resignation. So the first thing to say is this, right? If you do a tax return, an income tax return, chances are there's a lot of moving parts, right? So you would hire a tax advisor, a tax specialist to do your tax return for you. Yes, a lot of people try and wing it themselves, fair enough. But the point is, tax, income tax, complicated, lots of things going off. So you need the professionals. SDLT, on the other hand, by and large, 99 out of 100 times, it's dead easy. The calculation, which I'm going to show you, takes about 20 seconds. You don't need advice. You don't need a tax advisor to do your SDLT return. And how the industry has evolved in the UK, and that's how it works, that tax advisors hardly ever get involved in SDLT compliance like they would for income tax compliance, and instead conveyancers do it. Conveyancers tick a few boxes, work out the calculation, and off your SDLT return goes to HMRC. So it's non-tax professionals. Now, in the minority of cases where it's not easy, when it goes a bit off-piste, that's when you need tax advisor input on SDLT, because it can be really complicated when you deviate from the bulk standard SDLT calcs, as I'm about to show you. So let's just have a little look at the computation first of all. Property, residential property, let's assume there's no second home here, it's just one property, you sold it, you've got another one, you're going to buy another one, 800,000, what are you paying SDLT? Well, 125 grand at 0, 125 grand at 2%, and then the balance between 250 and 800 is at 5%. So your tax on those slices, 0, 2.5 grand, 27.5 grand, total 30,000. So you can see how easy that is for a conveyancer. You don't need to be a tax boffin to do that. It takes, what's that, 30 seconds? All right. So here's the other rule that says, oh, but if you've got a second property, you've got another property, and the government basically don't like landlords. This is why this rule is in the first place. And they've said that in the Red Book. I've done videos on this. And even the Red Book and the Treasury, it said at one year, we do not like landlords. We encourage people to invest in stocks and shares, not through property, because it distorts the property supply of property. So now, whether or not you agree with that or not, it's irrelevant. The point is, the government have got it in for landlords. Hence, restriction on interest, expense against income tax and all sorts, and SDLT being another. This is why we have this second calculation if you've got more than one property, right? So basically, again, it's a simple calculation. You take the percentages and the bands that you had in up here and just add 5% to everything, including the nil rate band. So 125 grand is at 5%, not 0. 125 grand, the next 125 is at 7 instead of 2, and so on, 10% instead of 5%. So you do the calc, 70,000 instead of 30,000. So you're getting penalised for having a second property under the SDLT regime to the tune of £40,000 on an example of buying an 800,000 property, which is quite simply 5% of 800 grand. It's that extra 5% on each of the bands. Right, so this is what all the hoo-ha was about. In the press, she paid that, but she should have paid that. But why exactly should she have paid that and not that? Well, let's take a deeper dive. So, seeing all this stuff in the press about this trust, this property that was put into trust. Here's a schematic, little property here. Here's a trust. So the trust was set up a few years ago. I've done videos on trusts. There's 3 things in a trust. Settlor, who moves property in, trustees, who looks after it, and beneficiaries, who benefits. Every trust, same 3 types of arrangement, participants, if you will, right? So Angela Rayner and her ex, they would have settled the property. I think they did it in stages, didn't they? They did some about 5 years ago and the rest now. And she received cash for the balance of this property to go into the trust for the benefit of the kids. Now, de facto, on the face of it, if this is your only property and you sell it, dispose of it, gift, whatever you do, you get rid of it by putting it into a trust, the first thing is it doesn't count as being a second property. If you're then going to buy the next property, so it's at the point of buying the next property that you test this. So major interest in a second home. So just transferring the property into a trust, on the face of it, yes, that because you no longer own the property, so it doesn't count because the trust owns it. That's the first thing. But with anything in the tax law, there's all sorts of caveats and caveats to the caveats. So the first thing to say is, but who are the beneficiaries of this trust? Well, in Rayner's case, it was her kids, all right? Under 18 years of age. So the SDLT rules say that, yes, moving a property into a trust, you should, on the face of it, escape from this second home charge. But if the beneficiaries of the trust are minors, all of a sudden, boom, it's back to being a second property. You've never really disposed of it for the purposes of SDLT. Yes, for capital gains tax and everything else, but not for SDLT. That's why, if the beneficiaries are children, it's back as being yours. Now, that's the exemption. But there's an exemption to the exemption that basically says if this trust was set up by decree of the courts for the benefit of someone who's disabled, vulnerable, if that was the case, then the exemption to the exemption kicks in, and it does then mean that the property falls out of being under your ownership for the purposes of SDLT and paying the higher rate. So let's have a look at the beneficiaries. Now, one of Angela Rayner's kids disabled. So this trust, was it set up by the sanction of the court for the benefit of the disabled child? Okay? If it was, then that escapes it being under her ownership for SDLT. But as we know, it was deemed that it was under her ownership for SDLT. So why then, if there is this exemption to the exemption, but this exemption to the exemption basically says, if this thing was set up by the courts for the protection of a disabled child, that's how you get the exemption. But who are the beneficiaries of this trust? I think, from what I can gather, it's not just the disabled child, it's all the children. And if the beneficiaries are a wider class, then again, it jumps back to being property in her name. You can't rely on the exemption to the exemption. So I think, reading between the lines, that is what happened. So we've got property moved to a trust, not part of being her second home. Beneficiaries under 18. Yes, now it's back as a second, set up by the courts for the disabled kid. Now it's not second, but wider beneficiary class, not just the disabled kid, other kids, boom, it's back again. So you can see how complicated it is. It's very nuanced. It's flipping backwards and forwards between was it a second property or not. Very complex SDLT rules here. Yes, then what exactly did she think that this exemption to the exemption applied, because it was set up for the benefit of a disabled son, and that's why she said, yes, well, it's over here, it's the exemption to the exemption, 30 grand. But then, obviously, when she did a deeper dive, someone said, but the other kids benefited as well. Therefore, boom, it jumps back to being second property and you're into the tune of an extra 40,000. So I just thought I'd do that video and share it with you. From what I can gather, what's been in the public domain in terms of the likely effect of what caused her to have to pay the extra 40,000 and why that transfer into the trust did not have the effect of not giving rise to extra SDLT because of the nuance that I've just described. So for goodness sake, the tip for the day, if you have got anything that's slightly quirky going on in terms of ownership, trust, whatever it is, see a tax specialist about SDLT. Don't, for goodness sake, rely on the conveyancers, because bless them, they're not trained to give tax advice. They haven't got a clue a lot of the time. They haven't got a clue when it comes to being a bit off-piste. They can do that, it takes 20 seconds, boom, you've just seen how easy that is, and they can tick a box. But when it comes to tax advice, they don't give tax advice in SDLT. So anything slightly quirky, for goodness sake, see a tax advisor. If you like this video, please do subscribe. As always, I'll see you soon.